And here we are. Thank you for staying with us. The Nigerian Exchange Limited All-Share Index and market capitalization appreciated by 0.46% to close the week at 47,569.04 points and 25.9 trillion naira respectively last week. Trading in the shares of Guaranty Trust Holding Company, GTCO, Mutual Benefits Assurance and FBN Holdings last week lifted the volume of shares traded as a turnover of 491.8 million shares worth 11.9 billion naira was recorded in 14,350 deals by investors on the floor of the exchange. The volume of shares traded was, however, higher than a total of 5.9 billion units valued at 8.8 billion naira that exchanged hands in 17 deals during the preceding week. The top three equities accounted for 211 million shares worth 2.5 billion naira in 2,834 deals, contributing 42.92% to total turnover. On the sectoral activity charts, the financial services industry, measured by volume, led the chart with 346.6 million shares, valued at 3.8 billion naira, traded in 7,427 deals. The sector contributed 70.49% to the total equity turnover volume. The ICT industry followed with 40.5 million units, worth 3.9 billion naira in 1,060 deals. The conglomerate industry ranked third with a turnover of 20.3 million shares, worth 28.9 million naira in 356 deals. Joining us to help make sense of this is Ambrose Omodio, the Chief Research Officer at CRO of Investita Consulting. He's right here with me in the studio. Thank you for joining us today.
Thanks for having me.
All right. So we're looking at the market wrapping up the week in the bullish territory. What do you have to say about this?
For me, it's a good start for the earnings season, knowing that the first early filers released the result for Friday, which is a good sign for the market. We saw the number from UCAB, impressive number. That from Gregu was a mixed number, because saw a decline. At the first 9 months result released to the market, after we have seen their projection for the listing of the IPO, by introduction. But I believe that what we saw this week that just were reviewing is that market is just preparing in expectation of more results to come to the market. And don't forget that today we're looking forward to see the consumer price index today being 17th of October. These are the things that also will shape the markets today. But investors should not panic at this time. What I always say is that, yes, I discuss sectors that still benefit from the low interest rate from the special intervention from CBN. This sector we're about to see a positive number. And the policy change in terms of rate hike and what is happening in our sector, we expect a result positive from that sector. That means, as a trader investor, you have to position ahead of the numbers for the market. Since some of them are started rolling already, like the one that came from UCAB, from Infinity Trust Mortgage Bank, investors should look at which sector should I be positioning. Now, that's why I said banking sector remain kind of, for me, investors to in terms of volume, in terms of liquidity, and also in terms of what share in issue. That means you can trade that sector easily for traders. Now they are seeing that most of them are selling at a discount. It's time for you to buy into those stocks so that when they release the result to the market, our market react to it. Or we are thinking that between now and end of October, all this result to be in the market, because every company that has end of quarter for September, has 30 days to release the result. That means between now and 30th of this month, we might see all the results. For that, investors should now plan around it. That means between now and the next 6 or 5 months, we see market oscillating, reacting to these numbers as they're hitting the market. And don't forget that the number that hit the market and you have made money, you cannot sell them to another one. That is why you see more liquidity and reaction this earnings season. That's why a good investor or trader should take advantage of earnings season to recover the loss he or she has made in the past, and also make more gain if you understand to play. I mean, I said that the market, no matter how bad it is, whether it's correcting, or people say it's bearish, but me, I don't believe that it's bearish. It's just a correction we're seeing in the market. You can still make money in this market. All
right. You said something about, I think, the price of the stocks and all of that. Is that what is responsible for the volume we are seeing, the turnover in volume? Is it because some of the stocks are cheap?
No, actually, we have not seen real volume to show that, yes, there is real activity in the market. Say volume of 400 and something million shares in a week tells that people are still sitting on the fence, and also the institutional investors, which are the PFS, are not playing the market. But people are looking at value. Value for me doesn't add up when you are doing your investment decision. You want to look at, is there people taking position? Is the volume that we are trading that matters? Value is just for you to get a figure of naira. But what is going in and out is what is changing hand between the buyer and the seller. That's why I said trading anytime is about what? Imbalance between the supply and the demand. If you as an investor have seen such volume, for me, it says that real money is not in the market. Yes, it's a good one that I've seen the market recovered for the previous week as a result of what banking stock, attraction, people to position of the low prices that really push the market up. But I believe that more will see the earnings today, and also the figure that will come from both statistics today will not guide investor, because if we see another, rise in the inflation, or more likely to see another hike in rate. But if
talking about is that what you think the CBN would do this time? That's the MPC.
No, we have seen that. I said we have seen again that the Emefiele we saw 2 years ago is not Emefiele we are seeing in recent time. This government that left interest rate unchanged for a whole 2 years. You know what it is? Because we want to put the economy in the right perspective, in the right direction to recover from the COVID-19 effect. Now that because the global economy is just hiking rate, in the last 6 months, we recruited 3 times with 400 basic points. That is huge. You are just tightening the economy, pushing the economy to a corner.
Yeah. Looking at the impact of that, don't you think the MPC might want to have a rethink, or just do maybe slight increase, if at all?
No, like what you said, I believe that a thing should what we expect, because if you look at the way the World Bank and IMF, it just only that if care is not taken, African continent, even we are seeing already the mature economy, you can see what happened. In UK, recently, if care is not taken, will push the nation back towards the recession. But if they are yielding to that advice, that would be good, because I tell you, it's not only interest rate you can use to fight inflation.
I was coming there. So what are the other things we should expect from both the fiscal authority and the monetary authority? The
fiscal authority should, for me, they should decide that they should hike their involvement in security. Because you want to attract foreign investors, you want to really move goods from farmers to go to farm to affect them. Because if farmers are the farm, we're not talking of inflation rising to this level, because more food coming from the farm. Because we don't have farmers anymore because of insecurity. Most of them are just farming around the road where they can easily run, but they are not going inside because of we don't know who is in the bush. If we are sure that air security is for the farmers, they go back to young graduates that are still roaming around the street can go back to farm. But because of that insecurity, even if you are telling a child to go back to afraid to go back to farm, because it's not secure in that farm. That's another physical move. And at the same time, what they did during the COVID-19, doing special intervention, which they extended also to March next year, which is okay. They can do more now, because if you really want to encourage some industry, the more we are increasing rate, we already know that cost is high, cost of energy is high. We're going to tell those companies to start laying off their staff, and that also increase insecurity. For me, this is where the fiscal will come. But monetary also look at the more I raise rate, the more cost of fund is high. That will also choke expansion, because when cost of fund is high, I want to expand my business. I will not expand my business. It's when I expand my business that I can employ 2 or 3 back to my down to my business. But for me expanding, I'm laying off to control the what I have. I'm laying off, also increasing security. And the role of CBN anywhere in the world, or certain banking in the world, is to stabilize price and also to create employment. And you use rate to do all this. If the rate is on one side, we're trying to fight inflation to stabilize price. At that time, we are not creating more unemployment. That is where they have to rethink, as you just said.
Okay, so if the inflation report comes today and it's higher, what reaction should we expect from the markets, seeing that it coincides with the earnings season?
Yeah, for me, actually, the news, or whether they call it fake rumor or whether it's correct, that the federal government want to kind of restructure their debt, automatically that will set panic to the fixed income market. You don't know whether it will be a favorable one or a negative one. And also that will also send a negative perception about Nigerian economy internationally, because that means you are not able to pay your debt. That's why we want to do reconstruction and all those stuff. Now, that is why we'll see a little of shaking up. But if the number was saw from UCAP, and we saw many companies posting that kind of number, I think it's the time for the PFAs to start thinking, if I get a good yield in this equity market with this, they must also be putting funds that will make the market
I'm concerned about what you said earlier, because before now there are those who are saying Nigeria should think of debt restructuring. They should think of certain options, just so that we can reduce the debt stock and maybe the amount which is being spent on debt servicing and all of that. But you are saying that doing that will affect the market, especially the fixed income market.
No, when you say you want to correct that, you don't know the nature of what you do. If you want to borrow less, is where you can still have your assets that are not active. You can start selling those assets to raise funds to fund your budget. Like I heard somebody saying that I should go into using equity to do to finance our budget. For me, for this a good suggestion, but is it workable? Are you going to send Nigeria to Nigerians that when you make profit pay us, or are you going to print money to pay us dividend? That's why I suggest that all those assets in Nigeria that are morable, there's a time for government to look at it. Either they provide those assets or sell it to the private sector to raise funds to do better things. That is what government should do. You know, going back to treasury, there is good, but who's going to favor? That's why investors will stay, you know, at the first.
I like that question. Who is it going to favor?
Yeah.
If it favors Nigeria, what about the investors?
Yeah. No, you can stay at the front that to watch and see what is going on, and that, you know, will keep the hand of people slowing down, you know, going into fixed income. And if they see better numbers in equity, that will also be a trigger.
Then they will go to the equities market. All right.
Because this third quarter number is going to show where equity market is going, because anywhere in the world, Q3 number will tell you what is likely to come at the end of full year, because we already see what the company has done for straight 9 months. We're already waiting for this season, what we call last quarter seasonality. And you know that last quarter, everywhere in the world, there's more business activities because of festivity, people preparing for the new year, companies selling their product, all this, you know, the high demand for, because this time, companies that don't demand for rice before would demand back to share.
Yes.
If they are not demanding tomato, would demand for that. There will be more sales for that. That seasonality effect you expect to have, you know, between now and December. And also December, we're trying to see what we call, you know, Santa Claus rally in December. You see end of the year and end of the quarter December. These are the things that will shape the market for investors. I would say any investor around the world, not important.
So are we expecting the institutional investors back?
Yes, that PFS. If these numbers are impressive, they have to come back, because already. The fiscal market, like I said, that's effect to see what, and also inflation will be another point. If inflation hits higher, their returns in fixed income still become more negative, because higher inflation and your rate is still, your yield is still low, below you are still in red. That's why I believe that it is this data we are expecting, the economic data, the macroeconomic data, and also company earnings that will determine where funds should flow to.
All right. Thank you so much for your time on the show today.
Yeah, thanks for having me.
All right. Well, I've been speaking with Ambrose Amodion, the Chief Research Officer of Invest Data Consulting. Nigeria will save 40% of its foreign exchange earnings when the Dangote refinery and petrochemical plant is in full operation in 2023. Amid the country's ailing refineries, we shall be looking at the prospect that this will serve for the country in terms of cushioning some of the country's problems. This and more will be a focal point after this break. Stay with us.